Craig Woodward. Craig's with Producers West Financial with Dominion Lending Centers as a mortgage broker. He's one of my go-to guys in the industry to take care of my clients. Craig, thank you so much for taking the time to get with us here on the Medallion Academy. We got some crazy times going on right now. How has this COVID-19 thing changed your life?
Yeah, first off, thanks for having me on the call, John. Yes, unprecedented times right now. The markets are crazy, as everyone's seen, and mortgages are no different. They're all over the map. We're finding that the lenders are tightening up on their approvals, but at the same point, they are also being a little bit more flexible on kind of the relief that we've got for people that are affected by the COVID layoffs and things like that.
Mm-hmm. So, how's it affected your business? Are you busier? Are you slower? Has it changed what's going on? What are people talking and calling you about?
Yeah, the market has definitely slowed down. We do have some more inquiries on refinancing and different projects like that. You're going to find that the lenders are quite a bit more conservative right now because they're aware that there's a lot of layoffs in place. And if you're presently laid off, they aren't going to accept that income when we're looking at approving your file. If you are currently working, they're just going to want to do a verbal with your employer and verify that your status, is still active and that you can work from home and different things like that.
Right.
If the other thing with refinancing a property is if you're self-employed. Of course, you can't get laid off if you're self-employed. So they're still going to accept your application, but they are going to do their due diligence, right? So they obviously know if you're self-employed and you own a restaurant, but your restaurant's closed down, they're going to count that as possibly not employed or laid off, their version of that for a self-employed worker, right? You're going to have to prove to them that you still have an income source coming in.
Okay. Now you're talking about these refinances. It seems like you're getting a lot of those questions right now. Is that being triggered by the conversations that are going on in the news about this Bank of Canada rate? What is going on with the Bank of Canada and how does that impact the rates? Where are the rates at right now?
Of course. So the Bank of Canada has done 3 50-point deductions on their key lending rate. How this trickles down to the lenders doesn't necessarily correlate. They don't go together hand in hand, but you have seen an equal deduction in your prime rate. So I won't get too complicated over the phone here, but prime rate has effectively dropped to 2.45%. What we used to have with lending rates is a discount off of prime. So prime, 2.45, minus maybe 50 points, 80 points. Some lenders were 100 points off. Mm-hmm. So at 100 points off, you'd be looking at 1.45%. As you can imagine, if a lender is paying out interest to a client through their savings account, and then they're reinvesting those funds in the form of a mortgage to you or I or any of our clients, they're really not making any money off 1.45%. They're in fact losing money. I just had a conference call with some lenders, Scotiabank being one of them, and they were saying the profit margin basically is at prime. If they're not getting prime even right now, they're losing money. So you're seeing most lenders right now are doing prime plus 10 points, 20 points, and upwards. Some lucky folks that are renewing their mortgage through a monoline company can even still get renewed at prime minus 100 points. So I'm telling all those people to lock in as fast as possible. When you jump over to the fixed side, you're actually finding a squiggled line. It's going up, it's going down 1 week after another. It's very hard to determine. I would never kind of forecast what my feelings on a fixed rate is going to be right now. It's just too uncertain. What I can tell you is what has affected the fluctuations. So right now, we had those immediate drops in our interest rate from the Bank of Canada, and that lowered prime rate. The initial response from the lenders were, okay, rates are going down. It's cheaper for us to borrow money, so let's pass that on to our clients. So they drastically reduced their rates to a low of about 2.34% on a 5-year fixed insured mortgage. Within 1 week, the Bank of Canada had lowered again. And with that, you didn't see the fixed rates lower. You actually saw them increase. And part of the reason for that is the stimulus programs that the government has in place, upwards of over $200 billion for Canada, kind of takes away all the access to money for the lenders, right? So if there's a lack of funds available for the lenders to borrow from the Bank of Canada to then lend out to us in the form of a mortgage, it creates a lack of supply, which increases the lack of demand for money, which increases the price. The other aspect is, if you look at the stock market, it's very evident that it has crashed on us. And in turn, your safe investments of your government bonds are going up. And there's a direct correlation between your bond rates with government bonds and your fixed interest rates. So right now, from that 2.34 low, we're actually seeing an average rate on a 30-year conventional file of about 3.14. And we're seeing maybe on an insurable file or insured file, meaning it's insured by CMHC or a back-end insurance agent, you're looking around 2.89, 2.84 on that. So they have gone up quite a bit, at least 50 points in the last, say, 3 weeks.
Wow.
Sorry about that long point.
No. So there's a lot of points, there's a lot of percentages, there's ups and downs, and there's differences. There's variable and there's fixed. People can give you a call and you'll walk them through it.
Most definitely, yes.
Yeah, it's a special language that you guys speak over there in the numbers, and I always rely on the experts for it. So, you know, absolutely, I think giving you a call would be the ideal thing for people to do. Right now, if I had a great job, you know, thank goodness we've got these first responders and these medical professionals helping us. Right now, if you look in the job world, those are great jobs. They've got really steady income coming in. If they're looking at this as an opportunity right now in the 8 hours that they're not working all day to go and get approved, where would you put them? Would you recommend them into a fixed or into a variable?
It's a good point. I would look at the timeline we have until their completion date is coming up, if it's very recent or if it's in the future. Right now, if you were to look at a variable rate, as I said, prime rate has dropped to 2.45. So even with, you know, a fluctuation of prime plus, let's say prime plus 20 points, we're looking at a variable rate of 2.65%. So the advantage of doing something like that will qualify you for a higher purchasing price because your effective benchmark or qualifying rate will be lower. It'll be 5.05%. If you're looking at a fixed rate of, let's use 3.14, your benchmark or qualifying rate is going to be at 5.14. So it's not going to make a huge difference, but it is a 10-point reduction in your qualifying rate, so which will qualify you for more money. With that being said, your variable rate, although I'm not overly excited that we went from a prime -1 environment to a prime plus 10 or 20 environment. I mean, that's a 1.2% spread difference in the matter of a 1 month time frame, right? So I'm not excited about that, but at the same point, there's so many advantages to variable. One being you can lock into a fixed at any point without penalty with most of our lenders out there. So in this stance, you could lock in for your 2.65% variable mortgage. And then if everything kind of balances out and creates a stable market, which we do foresee happening in the near future, then if interest rates do start to pull back and lower down, we can look to convert you into a fixed term without any penalty. So it's got to look at each individual, and it's a case-by-case example. So we'd have to kind of speak to people's desires and needs and wants in their mortgage. It's not really a pinpointed answer for you. We'd have to kind of determine it on a case-by-case basis.
Right. So there's just so many variables going on, I guess, right?
Oh, yes. Yes.
Yeah. So when these people come in, is the approval process still going through the same, or they made some changes in that based on where we're at in the world right now?
Okay, so approvals have become a little bit lengthier. We're finding more files are going to management and less files are just getting approved from the frontline underwriters. So if there's anything out of the box, anything slightly over ratios where they had the discretion earlier to just put their approval stamp on it, we're now finding that it is going up to the management, which is taking a day or 2 days extra to get those approvals in place. So it's a good point while I'm speaking with you and the other realtors in the market. it is something to keep in mind when you are doing your subject removal dates, is to kind of allow a little bit of extra time to give these lenders time to, adjudicate their file the way they need to do that.
Okay. Now, you brought a good point up in terms of these people who are out there in the market right now. If they've gone through the process and gotten pre-approved, and they're in that process of trying to find the right property, but they've lost their job, where do these people sit now?
I would advise them to speak to, they're more than welcome to call myself. They can speak to the lender that gave them their pre-approval already, or their broker, and they will be able to determine what potential consequences are going to happen. From the most part, from what I've seen from the lenders, is if you had your approval in place prior to March 31st and your income conditions were already satisfied, they are honoring those commitments up until September 30th of this year. And that would far exceed any of the completion dates that you guys are going to have on hand. Now, in specific instances where maybe they haven't put in their offer to the lender yet for their application and they're doing it now, you are going to run into problems if they were laid off. If you had your approval in place before and you were laid off and the lender becomes aware of that, what they're going to ask from you is an updated letter of employment stating an expected return to work date. Right. And that'll help them be reassured that you will have money in place to afford your mortgage.
Right. So this virus is really impacting people in a lot of different ways, especially those people who are thinking about making that move coming up in the next little bit.
Oh, yes. Yes.
Yeah.
Yeah. I've got numerous files, and we're getting updates on a regular basis saying, okay, we're got to put a hold on it now because they got laid off and things like that. So more than ever, it's a case-by-case example.
Okay. Any situations popping up yet of, I've gotten a deal accepted, everything's in place, but now my job is questionable. Have we got lenders looking into it after the fact now? We've gotten a deal, we've removed our subjects, we've gone through our due diligence process, everybody said yes, but we've had that period of time between that deal going firm, as we say in our industry, and the completion date. Is there any situation now where those lenders are starting to back up or starting to re-question things that are going on? I love it. I got a big wood one.
On wood, no, I haven't had not one instance where a lender has gone back to a lender after they've already satisfied, sorry, not a lender, an employer, after they've already satisfied their income conditions and said, oh, are they still working there? Is this still their position? Are they still guaranteed their work? I've had not one of those. You may see it happen in the future because, like I said, all these policies came in place for March 31st and we're just barely over that line, right? So you may see it happen, but I honestly, unless you give a lender to doubt your stability, I don't see them doing that further adjudication on the file. I believe once they've approved it, they're going to file it away and you should be good. Not to say that it can't happen, but from my experience, that's what would happen.
Sounds good. Okay, now there's other people involved in this whole process. We've got the realtors on my side, lending on your side. We bring legal and inspections and appraisals. Are you finding any differences or any problems in the appraisal process, inspection, or that legal process, finding people to be able to put deals through and create the documentation for it?
Yes, most definitely. So inspection-wise, I've had a couple files, and you might be able to speak more to this, but inspection-wise, I have had a couple offers come to my desk, which did not have inspections as a clause because the seller didn't want another person going through their home. I'll leave that liability over to you. I'm going to touch base on that later on. I still always recommend some type of backup plan, either an inspection or maybe a clause for some type of holdback if there is any issues. Once you get in, maybe you'll do an inspection or something like that. But again, that's not my language. That's the realtor language.
Well, yeah, it's about being creative, though, right? You've got to protect people, and it's about being creative. So, the idea of a holdback or those different things, that's getting the job done for sure. Sorry to cut you off there.
But apart from that, your lawyers, I've had some mainstream lawyers say that they're not accepting new clients. They're only dealing with their preferred kind of vendors. So are the preferred mortgage brokers or maybe preferred realtors that recommend clients to them. They'll still service those, but they have to lower their workload down. So that's how they're kind of doing that. On the other side, I've spoken to several lawyers over the last week. They're all open to business. They're just, let's prepare in advance, right? So if you've got a funding in a week, we might have an issue. If you've got a funding in 3 weeks or a month, we should be able to schedule you in. So it's not to worry. There is a solution out there. So if you can't get in with lawyer A, there is going to be another lawyer that will take your file. They've limited the locations. So some of these companies that have 10, 15 locations, like Spagnolio, for instance, are restricting their signing appointments to their Coquitlam office. So if you're in Langley and they've got their Langley location, expect that you will have to drive to Coquitlam, and that's for the safety of their employees, right? That's just a better environment for them to take their signing appointments. As far as appraisals go, it's a really good point, but they have restricted appraisals, and appraisal companies are, for the most part, not accessing buildings. They're doing external appraisals, and they're going around the building and they're taking photos of the building, and they're actually peeking through windows, believe it or not, and taking shots of the inside through windows. With this being said, this is not meeting the lender's criteria on what an appraisal has to be. Now, I've got to commend the lenders for stepping up. They've noticed that these changes have taken place and there's nothing that they can do around it. And I would say 9 out of 10 lenders that I'm dealing with right now have already given adjusted criteria for their appraisals. And they're really pushing through drive-by appraisals more, which is basically somebody doesn't even get out of your vehicle. They just drive by the property, make sure that it's not, dilapidated and falling apart.
That it's there?
Yeah, that it's there, exactly. And then apart from that, they're accepting the external appraisals, the exterior appraisals, sorry. So they're going around the building and appraising in that sense. And they're actually accepting those in lieu of a full appraisal. So they have stepped up, but again, these are things that might have to go to a manager for approval, right, if it requires that. And something to keep in mind for you and your colleagues is if the property value is over $1 million, it almost always requires a full appraisal to happen. There's no auto appraisal on an over $1 million purchase value.
Right.
Yeah.
Which means basically if it's not attached to something else in our neighborhood, it needs that full appraisal still.
Yeah, so, exactly.
Yeah. Well, Craig,
so that's appraisals, that's lawyers, inspections you can touch base on. Apart from that, land titles office as well, they're deemed an essential service. So there's no risk of, the lawyer completing, the sellers completing, the buyers, and then they're not being able to actually attach it to the property. They are open for business, and you'll have everything's fine there with attaching the charge of the lender to the title and your name to the title of the mortgage.
Yeah.
The property.
Now, how are you managing client contact yourself in your business? Are you meeting people? Are you all digital? How is that impacting, or how have you adapted to that?
As just like our meeting right here, right? We're doing FaceTime chats for those people that do like to see who they're speaking with and have that kind of one-on-one interaction. A lot of it is just, sending online applications out to clients and then calling them to verify information and doing it that sense. So it is all virtual at this point. We've kind of restricted ourselves with the social distancing. We've got to respect those rules and limited our contact in that sense.
Terrific. Well, I really appreciate your time with me today and supporting the people who are out there getting involved with Medallion Academy. We're stoked to have you on here. Just the first of many calls. We'll get some information posted onto the site and to our social media so that people can reach out and contact you, Craig. But again, thank you for being a resource for me, for all of my clients, and best of luck to you and your family and your business. Stay home, stay safe, and stop spreading the virus.
My pleasure, John. And thanks so much for having me on the call. What else I'll do is, and we'll speak to your editing guy, I do have some government programs for relief, and I don't know if you want me to quickly chat about that, but if there are existing clients you have that that are coming to you and they're stressed about making their mortgage payments and things like that, please ask them to reach out to myself, whether they're my client or not. I'd love to help them out. We can talk about the deferral programs from the government. We
Oh,
can talk about,
yeah.
yeah, we can talk about rainy day options as
Yeah.
well with the lenders that doesn't require that deferral as well, right? The rainy day option is basically you can call up and get kind of defer a 1 month mortgage payment. And that's not a special program. Most lenders offer that. If you want to go to the 6-month program, there's great options from all of the lenders. I've even had some great options from private lenders on these things, which don't have to abide by the same rules that the government's putting in place. And they've still all been stepping up. So again, that's a case-by-case example, but if people want more information, please just reach out to me at any time. At the end of this, I'll also send you a report that tells you all of the government programs that are going on right now for COVID relief. So whether they're mortgage related or not, they can still assist people. So if you've got maybe a property and you've got a rental tenant in there, right?
Mm-hmm.
They can get relief of
Right.
$500 a month on their rental. So if you as a landlord need to cut them a break, they can also get some subsidy from the government for $500 so that you're still able to pay your mortgage, and maybe you cut them a break in the meantime as well, right? So there's lots of programs, too many to mention on this call. There's probably over maybe 15 to 20 different ones, but
Wow.
I'll send that over to you, and maybe you can upload that at the end of this, and people can take down the phone numbers and maybe make note of the program.
Thank you so much, Craig. Again, just a knowledge fountain for us. And as you say, there's so many things going on, whether it's federal, provincial, the opportunities with rental relief and income and all these different things. That's a great resource. And I'm so happy that you're going to share that with us. We'll get that posted for all our followers as well. Thank you again, Craig. It's a pleasure talking to you, and I look forward to connecting with you again.
Thanks, John. Take care.